Good afternoon, everybody. Welcome to the market close. Boy, what a day on the market for sure. We are, of course, in a red day. We're in a red day for sure. I want to start, before we even get into anything, I'm using the wireless mic today. So I've switched over to the wireless. You guys have got to let me know if it's working, if I've got the settings all correct, if I'm coming through loud and clear. Let me know in the chat as soon, as soon as you can. I know there's a 15-second delay or so, but let me know if I am sounding clear. Hopefully. So anyway, why did I switch to the wireless? The last video, when I was filming that last video, the one that's out today, I had to film it twice. Because I got a whole bunch of really weird audio distortion on that first one. So I think the old desk mic might be on its last legs. So it's time. It's time to break out this one. And this is a great mic. I actually used this mic when I did the live stream from Parliament. So gotta love it. All right. I now see that you guys can hear me all clear and such. Perfect. Let's get into the show. We're gonna start with the market. And oh boy, that's not the market. That is not the market. Here we go. This is the market. We're gonna jump over to the TSX. What a wild day. So as you know, we had that big crash at the end of last week. So the whole idea of Trump, China, tariffs, oh boy, didn't go over well with the market. And as you can see, we had this big drop that kind of comes all the way down behind my head. I also changed this up. I wanted to give you guys a bit more of the screen to make it a little bit easier to see things. So I thought, let's turn me into a circle and put me somewhere where I'm not going to interfere with things. Well, I think I'm interfering with things for now, but that's okay. You get the gist. So we had that. Now we had a really good recovery. Tuesday, this here was Tuesday, the first part, and into Wednesday. Then along came Thursday. Well, Thursday we had a drop, a little bit of a recovery, and pretty much a big drop today. So what's going on? I can tell you, there's two drivers. One's more important than the other. So I'll give you the one that's not that important. And a lot of people, and this is the one that people are freaking out over more than the actual one. But it's all from the U.S. sector. It's all from that spillover from some of the U.S. regional banks. So a couple of American lenders, they reported some loan fraud disclosures on Thursday. And that raised a few alarms, basically in regards to credit quality as well as some potential contagion risks. So some of this U.S. crap moving across the border, affecting the Canadian markets. So we're worried more than we should be about it. But to be honest, this is not the big driving force. This is not the big driving force of what we're looking at today. And I'll show you what is. Let me show you one commodity. Let's go to gold. Here we go. Look at gold. Gold has been propping up the Canadian economy. So when gold falters, so does the Canadian economy, so does the TSX. And that's just what it all boils down to. It's gold. Gold is the one that that has driven our downturn. And if you want proof, if you want the proof in the pudding, I'll give you the pudding. The pudding here is that the U.S. markets are all in the green today. So why is gold suffering a wee bit? Well, it's actually not a bad thing. It's for the simple reason that a lot of the tensions, so when the whole tension was going on between China and Trump and his new tariffs, a lot of people were saying, oh boy, things are getting tense. I'm moving my money into gold. And that's why we had this huge mega pump of gold right here. So people were moving into gold, mega pump. I guess you could call it a punch. Mega pump. it put gold up, new all-time highs, all of that fun stuff. But the heat has come off, and it's not turning into a really big concern. So, of course, we saw a bit of recovery in the markets, and then once we got the recovery, people were looking at it and saying, okay, I don't have to use gold right now for safety. Everything's okay. I can pull some of my money out. And that's what we're seeing. We're seeing, well, two things. We're also seeing some profit taking, because whenever you see an all-time high, profit taking is pretty normal. So we're getting some profit taking. We're also getting people who are feeling a little bit better in the last part of this week about the overall markets compared to the beginning of the week, and they're pulling that gold out too. So that caused gold to drop. So it's not a crash. It's not the beginnings of a bear market. Gold is not about to crater out. Gosh, if anything, this is, it's giving you a little bit of a better spot to buy. I would rather buy it here than up here for sure. But gold is fine, and gold is going to continue to be fine. And I wouldn't be super concerned about today's market. Like I said, there's going to be people out there on YouTube, maybe at the water cooler, who are going to be like, oh, the market, it's over. It's over, everybody. It's not. It's not. It's absolutely fine. This is nothing more than, if we had a drop like this and we didn't have a logical explanation for it, well, then yeah, then I'd be a little more worried. But right now, we're fine. We're fine, and that's what's causing. Well, that is what's causing this. And as you can see, we're still in the green for the month. Not by much, though. We came all the way back down to that blue line. So currently today, we are down a full percent on the TSX. And as I mentioned, look at this, the US, the S&P 500 up 0.56. Now they are technically in a red month right now, but they're not far. They'll get above that line. The NASDAQ up 0.73. So tech doing okay. They're above the blue line. I'm liking that. The Dow Jones up 0.56. Dow Jones is doing okay. Now, the one U.S. market that is struggling a tiny bit today is the Russell. The Russell is down 0.27, but as you can see, that happened in this part of the day here, and the second half of the day, they have been slowly recovering. So, and, gold down 2.33%. Silver, same idea, but a little bit worse, down 4.63%. Oil's up a tiny bit, 0.71. I would still call it mostly flat. Now, crypto not having the best day. Bitcoin down 1.56. Ethereum also down 1.76. So what can I say? Nvidia's up 0.59. So there you go. There's a little bit of blessing there. All right, let's hit the heat map. Oh, come on, guys. I don't need these numbers on the side. Let's pull it over. As you can see, it's actually, and look at the banks. So you remember when I talked earlier about the two drivers, one being the financial sector? It's not carrying over into our banks. I mean, look at this. Royal Bank is up a tiny bit. TD's up a tiny bit. Well, it's flat, but to the upside. It's a green flat. BMO. CIBC is down a tiny bit, but and National Bank is down a tiny bit too. Let me remove this stupid ad here. Oh, and also Scotiabank. But nonetheless, nothing dramatic in the banking sector. Our financial sector looks pretty good. You could argue there are some red in there, like Fairfax Financial is down a wee bit. Now, our mineral sector, that is where we got hit. So our non-energy minerals, that's where your gold lives. And look at this. It's a bright red in the middle of everything. And you can see, look at this, Kinross down 8.91, Barrick Gold 6.26, London Gold down 2.35. So yeah, there's a little bit in there as well. Pan American, they're down 8.37%. So that one has a lot of silver. But the rest of it looks okay. The rest of the market looks pretty good. So yeah, they've powered our trip down, our trip below, our trip below. Oh boy. Looking at the U.S., and we'll switch over here to the United States here. Let's pull that away. As you can see, not a lot of red. Not a lot. Like, look at this. Tesla's up today, 2.37. Apple's up almost, 2%. Nvidia's up a 0.65%. Microsoft's up. Google's up. Meta's up. So a good day for the Fabulous Seven. Do we have anybody? Well, Eli Lilly down a little bit, 1.90. Now, I know in Canada there was actually some news about Ozempic. It looks like coming up in January, we're going to have a generic version of Ozempic here. So that will that certainly isn't going to help some of these weight loss drugs like Ozempic and Wegovy. They're going to lose a little bit of market share to that. To the generic versions. But that'll also bring the cost down. Those things are really, really expensive. So what can I say? All right, and I'm just paying attention here to the time. We get about 5 minutes to the bell. Let's head over into crypto, and oh boy, crypto just not having a good day. A lot of red. Bitcoin, Ethereum, XRP, Cardano, Dogecoin, Solana. Oh boy. And let's find ourselves, I like to highlight a coin I've never heard of before. Let's grab this one. I don't know what this is. Infinity Ground. I got no idea what it is. It is up though. Give it that. And it is worth a tiny bit. It's worth a 0.13, so 13 cents, 13.1 cents to be a little bit more precise. Yeah, and it looks like they've been worth next to nothing for the longest time, so maybe there's something going on with this coin. I don't know. There's more than 15,000 of these altcoins out there. I call them crap coins because it's like going to the craps table. It's not, the odds are not stacked in your favor. So it's a bit of a gamble, but obviously if you do your homework, read the white paper, find coins that make sense to you, maybe that will help your odds. Maybe not. I just won't take a chance on them. There's lots of money to be made in crypto, no doubt about it. But I stick to those big ones, the red ones today. You know, your Bitcoin, Ethereum, XRP, Solana, and gosh darn it, even the Dogecoin. I will stick to them as well. All right. Whew, I'm getting around here today. Let's go big. Let's go big and say hi to the chat. And we got Jonathan in first. Am I late for a gold rush? No, you're not. You are dead on time for a gold rush. Claude, hello. Markets are not green, but they're not red either. They are blue. Go Blue Jays. Yeah, guys. I mean, if you're following the baseball playoffs, the Jays in Toronto lost the first 2 games. And I'll tell you, it wasn't looking good. It wasn't looking good, but they head over to, I believe it's Seattle. They headed over to Seattle, and they then won the next 2. So it's all tied up, 2 games apiece. I believe it's a best of 7, so they got to win 2 more. But I also think there's a game tonight. So hopefully the Jays can win. I'm going to assume, and this is an assumption, I think tonight's game is also in Seattle. And then the 2 remaining games, if needed, would be in Toronto. So, you know, if I'm wrong, let me know. I don't really follow baseball, but I do follow Canada, and Jays are part of Canada. What can I say? All right. Stan Gray is in the house with a happy Friday. Well, hello, Stan. I hope you're having a wonderful weekend. Kiev and Katz says, hi, gang. Brian says, good afternoon, everyone. And Nav in St. Clair. That's right. So we're using the wireless mic today because my old desktop, my tried and true desktop mic, it's letting me down too much. And I'm not going to let you guys down with poor sound quality. CC says, most volatility I've seen since the 2020 drop. Get used to volatility. I think we're going to be fine. I think we're going to be up for the year, and I think we're going to continue going up. But we're not going up in a straight line. We're going up it's It's going to look like a heartbeat, a heartbeat monitor, but slightly tilted up. We'll get up there. Brian says, I'm deaf and I hear you clear. Awesome. Rory says, good afternoon. October bringing in the bears. Oh, yeah, absolutely. Hugamilo says, I'll give the beaver a like right now just because. Oh, yes, absolutely. Yeah, and I haven't seen Mary. So, guys, do me a solid, total solid. Just hit that like button. Hit the like button. I'll have some coffee since you guys are hitting like buttons. Very, very good. Brian says, well, oh, I got 2 seconds. 2 seconds. All right, guys. That is the close of the market. I cannot believe I just glanced up and it's just like, you got 2 seconds, Candace. Do it now, or be a banana bread head forever, because you're going to miss it if you don't. So it's done. It's done. I love it. Oops, sorry. Before I get to Danielle, Brian said, loan fraud. Did Trump finance another Trump Tower? Oh, boy. Actually, I think right now Trump wants to build an arch. He's talking about building an arch. So I don't know if it's going to be 2 arches and paint them yellow, and then he's got his own McDonald's. But he's looking at building an arch of some sorts. Danielle says, hello all. Another crazy, beautiful day in Montreal. Yeah, and I'll tell you, there's probably a lot of excitement in Montreal because the Canadians are off to a really good start to the season. I think they've only lost once. Is it 4 wins, 1 loss? It's pretty good. It's a good start. And if you've ever been to Montreal, you'll know how crazy Montreal is about the Habs. Very, very, very big. Danielle continues. I was into gold, but now I put my money on copper. I just hope I am right. Copper is a good play, and I'll tell you why. Copper is, of course, used in pretty much anything that needs critical minerals needs copper as well. So yeah, it's going to be very, very, very in demand, and analysts have been predicting. They've been predicting a copper shortage by about 2030. So yeah, copper, I'll tell you right now, copper, I wouldn't even look at a short-term play on copper. If you're getting into copper, I would get in for a longer term. Just dollar cost average while it's lower, because it's going to go up. And we've already seen some of that movement already. All right, Larry is in the house. Hello, Larry. Now that we know healthcare premiums will increase next year in the U.S., I'm very bullish on UNS, so United Health. It also has a 2x ET. Of course it does. I bought shares first in the mid 200s. Now it's 350ish. Yeah. Yeah, I do like United Health. And even a lot of the health ETFs that we have here that do cover the U.S. and Canada, United Health usually has a pretty good positioning within them for sure. Claude got some London gold. Good stuff. Good stuff. Zyborg is in with cheers all. Ian says, bought some ENCL today. Maybe someday I will learn. I like ENCL. I think we're at a time when that's the type of stock that, especially if you're looking for a little bit of income, I like it. I do like it because oil's not going to be down forever. It may feel like it right now, but, and that's the thing, oil tends to be very cyclic. It goes through stages like this. When we get on the other side of this and oil starts going up, if you're holding something like, if you've been buying ENCL when it's down, well, yeah, you're going to get the income on the way up. You're not, obviously, if you had something like XEG, you'll get more upside potential. However, the leverage on ENCL will get you close. And the nice thing about this is that you're at least getting some income from it while you wait for oil to turn around. Whereas if you're holding something like XEG, and I am in the challenge, I'm not getting anything. I'm not really getting anything while I wait, other than the satisfaction of knowing it'll do good sometime in the future. Rory says, I topped up ZDV and ETF from BMO today. Yes, I do. I like some of the BMO ETFs for sure. And I'll tell you, I've had, there's people on, there's a lot of people that sometimes question the BMO ETFs based on one fact only. They do tend to do a lot of sponsored videos with some of the really big financial YouTubers. But nonetheless, they're still good. They're still a good company. I do like BMO. They're well managed. And I normally don't promote big banks that much, other than, well, BMO. I like their ETFs, and I also like I like CDRs. So CIBC gets some credit there. So I do like CDRs as well. All right, Ian is in here. Planning on selling the rest of my Scotiabank and WCP in January. I want to just own ETFs now for the most part, waiting until 2026 to spread out my capital gains. All right, love this. In the monologue coming up on Sunday, I actually do have a story on the popularity of ETFs. And Ian's hit something on the head here. ETFs have been growing crazy popular, crazy popular. And a lot of people are not wanting to hedge their bets with individual stocks as much as before. And you'll notice, I mean, I follow, this channel, we follow the pulse of the people, the pulse. So as more and more people are getting more and more into ETFs, you'll notice, I mean, just look at the content today compared to the content 2 years ago. The content 2 years ago, it was almost all stocks, straight up stocks. I'm still going to touch stocks, of course, but ETFs are starting to become so popular that as a financial channel, I can't afford to ignore them. So I definitely embrace them much more than I did in the past. Convos with JJ is there. Hey. And let's see, can we coordinate the AMA podcast live for tomorrow evening? Yeah, we can. Just reach out to me. Reach out to me later. We'll set up a time. I was actually thinking yesterday, we really got to get that moving. So yeah, I'm sure we can do that. Rory says, Bell. Yes, and I got it. I got it exactly. Jim says, volatility is great if you got cash call leveraged ETFs. Absolutely. Yeah, no doubt about it. I mean, volatility is very good for covered calls. Covered calls love volatility. And in fact, the more volatility in the market and the more volatility in a specific basket of covered calls, the higher premiums that they can charge, which means, premiums is how much fees they're getting for the options that they're selling. And the higher those fees, the more they can then give you as a dividend or a distribution. Yeah, absolutely. Stan says, my weekend doesn't start until 11:15 tonight. Oh boy. That's a long wait, Stan. It's a long wait, but I'll be asleep then, but part of me will be there with you to say, hey. Well, I might be asleep. I probably will be. I'll be in bed. I can't guarantee I've fallen asleep yet. Roku Stittsville, afternoon all, like button activated. Yes, exactly. Activate the like button and it gives you special powers. No, it doesn't. It really doesn't. But why? I could try, right? Danielle says, we do love our Habs. I was at the game Tuesday night and it was crazy at the Bell Center. Going to Calgary next week to see them play against the Flames. Will be my first time in Calgary. Oh, you're going to love Calgary. Calgary is beautiful. And here's the interesting thing. The Flames, they play in a building called the Saddle Dome. Pay attention to what that building looks like. It actually looks like a saddle. So it's pretty cool. Roy saying Saddle Dome in Calgary is the oldest arena now. Yeah, I hope the Flames never leave the Saddle Dome. It's kind of like when Montreal, when they moved out of the Forum, I'm like, oh my God, so much history. You know, and now it's like a shopping center, the Forum. Although, if you go to the old Forum, even though it's a shopping center, in some of the stores and just different places, you'll find some of the original seats from the Forum there, like the seats that the fans sat in. So they're placed all throughout. It's pretty cool. CC says, one guy I watch follows copper as a health indicator for the market. What's the background on this? That's a good question. I guess I'm gonna go this route with it. And this here is, it's kind of just, this is more of an opinion answer. I'm gonna give you an opinion answer. I don't want you to run to the bank with this one. This one's just an opinion, but copper is in a huge part of manufacturing. And demand for copper is, as a result, going to be kind of reflective of demand, overall demand in the market. So when there's a lot of demand and they're building houses and a lot of electronics and people are buying all of that stuff that has copper in it, the demand for copper is high. If the economy slips and it's not doing so great and people are not spending money, they're not buying new electronics, they're not building new houses. Well, obviously, then at that point, the demand for copper will decrease. And so that in itself could be an indicator for the economy. Is it the best indicator? No, it really isn't. But there's a lot of different indicators. There's some really weird ones. There's actually an underwear indicator. Just, you know, so when people stop buying underwear, you know things are bad. Let's just say, I hope the economy never gets there, because I don't want to smell that. Larry says, just as cheap as it was on the Liberation drop. Oh, nice. Nice, yeah. And I mean, and I think Trump is going to give us more opportunities. You know, his days of being unpredictable are not over. Are not over by any way, shape, or form, that's for sure. And Rhett says, I picked up 35 shares of Strategy at 1060, just averaging down the cost, hopefully not terrible. What's your thoughts on Strategy? I got averaged down to 1230. All right, so Strategy. So Strategy is this real, I mean, they're an interesting company. It's kind of one of these things. A lot of times when Strategy struggles a little bit, you know, and a part of it is because, well, you know, if Bitcoin is down, and Bitcoin's down a bit, so that's certainly hurting them, because they do hold a whole lot of Bitcoin on their balance sheet. At one point before they actually had Bitcoin ETFs in the United States, Strategy was almost kind of like having an ETF, like a Bitcoin spot ETF, because of the sheer amount of Bitcoin that they hold. Now they have a strategy, you know, they borrow money, convertible bonds, all of that fun stuff, so that they can buy more Bitcoin. They're really, really gambling on it. But is it really a gamble? So far, Michael Saylor he's kind of had the last laugh every time. So I wouldn't bet against them. Well, I will just say this. I am bullish on Bitcoin, I think, long term. So yeah, I wouldn't bet against Strategy. I think you're going to be fine. I think the big thing with Strategy is if they do come down, if they do struggle for a little bit because of some of the moves that Saylor's doing behind the scenes to secure more Bitcoin, if anything, those are the times to average down. I think they're going to be fine in the long term. And you know what? There's people who will argue and say, "Oh yeah, but you know what? Once they get leverage called on all of that, or margin called on all of that debt, it's like, no, that's not going to happen." A lot of their Bitcoin was bought at very low prices compared to today. They're in absolutely no danger at all. Bitcoin would have to, the only thing that would cause danger for them is if Bitcoin were to completely collapse, and that's not going to happen. But you know, what can I say? Anchor Tours. Let's see. I hope gold is still on a roll. I just bought some Agnigo. There we go. That's one of these words that I look at it and I have to think for a second. How do I say that? All right. Danielle says, what is your favorite covered call ETF for long term? Copper, I agree, long term, and dollar cost average, because the demand will increase in the next years. I think you said that in the last stream. So okay, long term. I got a couple. So right now I am loving HHIS. I'm also loving HHIC. I think those are fantastic. I think those are going to be favorites for a while. I'm also a big fan, of course, of HYLD. Um, I think as well. I'm thinking here. I have been in the past a big fan of like QQQC, or sorry, QQCC, and now QQCL. But there's so many good new ones that have come out, and I'm kind of like, which is my absolute favorite. Now, another one too is Bank. I really do like Bank as well. And also HDIV, HDIV. Those are both really, really good ones. So I need time to think about this, but I'll tell you what, Danielle. I'll tell you what. I will make, before the end of the year, I will make a video on my 5 favorite cover call ETFs. So that way there I can think about it and I can put it together in a video. So that's what I'll do. There we go. I love that. Sometimes you guys give me great ideas for videos, and that's a great one. Emrit, I got more GLCC. Why the dip, I wonder? Okay, so, oh my gosh. If you were here at the beginning of the show, I guess you weren't because you asked that question. So yeah, I was talking a little bit about it. So as there was so much uncertainty and fear going on in the market, especially over the Trump, China tariffs, all of it kind of creating chaos, a lot of people moved their assets into gold, caused gold to pump pretty big in the last little bit. And now things have cooled off. So the Trump-China tariff thing is not as big of a deal. China doesn't look to be retaliating. And that's made things better. So people who put a lot of money into gold, well, there's 2 different classes. One, there's those who just said, oh boy, new all-time highs, I'm taking profits. So that certainly helped bring it down a little bit. And people who were feeling a little bit better about the market, pulling the money back out of gold, putting it back into assets, into other equities, that also helped. But yeah, that's why the Canadian market tanked, because the Canadian market is, most of our biggest stocks are all gold. So when gold tanks, so does the TSX. And when gold, same idea, when gold explodes, so does the TSX. All right, Rory, let's see. I'm still single stocks on CNQ, CNR, and ENB, CU. Everything else is ETF. Yeah, exactly. So that's the thing. I mean, there are sectors. So for example, if you wanted, if you wanted good railroad exposure, you could always have one sector where you've got some stocks like CNR, CP, all of that fun stuff. Or maybe even Union Pacific if you want some U.S. exposure in there. But yeah, ETFs are getting more and more popular, and the ETF management companies, that's why they're making, like, if you wonder why there's so many new ETFs, because the demand is there for them. The demand is there, and I kind of like it as an investor. If you give me a whole bunch of different options with, and I don't want to use options as in options, but as in choices. If you give me a lot of choices on ETFs, then I can really cater what I want to do with my portfolio. And that's not a bad thing, not a bad thing at all. Ian says, on ETFs versus stocks, most people, myself included, don't know how to analyze a stock. That's why I'm moving to ETFs more now. Oh yeah, no. Well, ETFs, you don't have to analyze them as much. So you take a company, if you're looking at a company, boy, there's a lot you got to do. Because there's a lot of data really to crunch when it comes to a company. But with an ETF, yeah, as long as it's coming from a good company. So, one of your tried and trues. Like I already mentioned, I like BMO, I like Vanguard, Hamilton, Global X, Horizon, Evolve. You know that they're going to be, they've got a lot of good people who work there. And as, of course, ETFs get more and more prominent, these companies are probably going to be bringing in even more people, and more focus will be going on to it. So yeah, I like it. I like where it's heading. And ETFs, they're really a good way to get some diversification with a lot less risk, for sure. Vic is in the house. Vic normally can't join us on Friday, so eyes on the road, hands on the wheel, but ears on the live stream. Nice, yeah, absolutely. Vic drives for a living. Like we're talking big trucks, 18, I believe 18 wheelers. So, Rory says, I like the ETFs for monthly income, which I need. There we go. That's one good thing about ETFs for sure. And Jim says, I'm getting money semi-monthly to spend on more ETFs. Yeah, and that trend, as we've seen, for example, with the Daymax ETFs of basically dividend twice a month, I have heard, and I can't remember who, but I heard at least one other company thinking of converting a few of their ETFs to the same scenario. So I think we're going to see more of that in the future. I think we'll definitely see more of that in the future. Ian says, Bank and HYLD are my two biggest holdings. I got no complaints, Ian. Like I said, I like both of those. I like both of those ETFs quite a bit. All right, Claude, uranium got hit hard too. Do you know why? So Cameco, Hura, ETF. Okay. I don't have any one specific reason for uranium, but I know the whole sector sort of suffered and kind of everybody got pulled down a wee bit. I'm still very, very bullish on uranium. And you know what? This is, to me, I look at this as an opportunity. Uranium, the demand is going up. There's going to be a lot of demand for uranium. And as such, anytime uranium drops down, that's a good buying opportunity, in my opinion. As we get more and more into nuclear power, and that's, and the beautiful thing is, this is not just a Canada thing. This is a world thing. So there's a growing demand for nuclear power globally. And the best uranium in the world, well, it all sits in Saskatchewan. So that's not a bad thing for a company like Cameco. And yeah, I'm still very bullish on it. Defense is in the house. Hi there. Nice news. A video with cover call ETF. Will you add some recommendable US too, like QDTE, RDTE, WDTE, ULTY, HOOW, etc., analyzing their stats. All right. So yeah, I've not really touched US ETFs, but I am getting overdue. I'm getting comments. There are people definitely who want to see it. So I will definitely do a US ETF video down the road. And I'm not sure exactly how I'm going to pull it off. Do I want to just do one on US, or do I want to do? I did this one series a long time ago where we basically did a team of US versus a team of Canadian, but we used stocks in that one. But maybe it's time to bring that series back and do some Canadian ETFs versus American ETFs. So we would basically, I'd create a portfolio of both. Not a big portfolio, like maybe a handful of each, like maybe 5 each. And we could chart them over a year and see what they do. That's kind of in the back of my mind. So I'm thinking about that. That might be the way to go. Brian says 10% of my portfolio is individual banks, 23% is bank, BK, and even EIT has a lot of bank content. Considering reducing my individual stocks and putting it into ETFs like HHIS, and several others. I think you might have meant HHIS, maybe HHIC, and several others. But yeah, yeah. One of the things I did in the 0 to 100K challenge recently is I got rid of Scotiabank. They were at nice profits, and I just moved that into bank, also a little bit into HHIC. So yeah, I'm kind of like, I've been kind of tinkering a little bit with that portfolio a little bit. So there's going to be more little changes for sure, just to try to get rid of some of the duplication. HHIC, yes, exactly. That's what I was thinking. Rory, I'm still 5 cents sorry, I'm still 5 cents away from getting bank. Oh, 8.75. Oh, 5 cents. Well, maybe you'll get it. Hopefully you get it. Let's see. Buy it. I think they target 15% dividends. I bought a ton of HYLD, but bank seems to miss my limit orders. Uh, bank just does so well, Rory. What can I say? Let's see, or was that BL or BK? Yeah, BK. So that's a split core bank. I do like it. So when it comes to split cores, I have two that I really like. ENS, they basically are an Enbridge split core, and BK is a bank one. Those are the two that I really, really like. But if you watch today's video, there's an ETF I like too, and that video sort of highlights that. Well, it does. It doesn't sort of. It does highlight that. And it's kind of interesting. It's one of those situations where, let's say you want income and you're like, I don't want covered calls. Well, this CLSA might be your option for that. Amrit, EQ Bank looks to be in a rut. I remember when it was around 107. Yeah, EQ Bank a little bit. I'm concerned a little bit about it. Like, they really should be bouncing back, but they haven't yet. They haven't. Like, I use them. I like EQ Bank. But gosh, I hope I can see some recovery in their stock price soon. Because I'll tell you, I'm starting to lose a little bit of my faith. I'm losing a little bit. No, I still like them though. Jim said more semi-monthly ETF products would be great. I like them. Rory says Canny and Biggie, but too new for me. Yeah, that's a problem. Is that, with this explosion of ETFs, there's a lot of new ones. So we don't have really big runways on them. Because, like even today, I had a comment on CLSA, and they have only been around since, I believe, March. So I don't even have the tax profile from the last year. So it's hard for me to know exactly how the taxes are going to break down. However, I can use a little bit of logic here. So CLSA, that you don't have covered calls, so you don't have premium income. Some of that underlying stuff is coming from eligible companies. So you'll have a little bit of eligible dividends in there. Although a lot of the eligible dividends will actually go to the preferred shares that they're, of the ETFs that they're holding. So, but you'll still get some. You're definitely going to get some return of capital, and you're probably going to get you're definitely getting capital gains. So that does make something like CLSA quite tax efficient when it comes to, if you have to put an ETF in a non-registered account, CLSA may very well be one of those ones that is pretty tax efficient for that. Anyway, that was the question. Brian says, I've thrown some dividend money at Canny and Biggie. Okay. Yeah, and and that's what some people do. Some people will actually just take their dividends and use that to get exposure to some of the newer ones. And, there's nothing wrong with that. Like, there's nothing wrong with having a lot of ETFs if you want them. I still will look at them and I will try to balance the best I can because, for me, diversification is important. And sometimes you can get a lot of duplication. And you kind of have to sort of give a general idea. So one of the things I will like to, sometimes that's not a bad thing to do, is if you go in and look at the holdings of your ETF, don't just sort of blindly grab an ETF, look at the holdings. You can even see sector breakdowns. That way there, if for example, if you're thinking, okay, well, I'm going to get a whole bunch of HHIS. What's another one I get? Oh, I'll get QDay too. Well, you're going to get quite a bit of overlap between the two. So that's always something to keep in mind. So when you're thinking about diversification, if you want both HHIS and QDay, there's nothing wrong with having them both. But keep in mind that when you're looking at your overall diversification, you got to kind of count it. So maybe, for example, if you're looking to have a maximum of 20% exposure in tech, well, then maybe if you're trying to get both of those, you might want to have maybe 10% each. I mean, that's just a thought. All right. Defense says, nice idea. A small portfolio with some covered call ETF and US ETF. Yeah. That would be, to me, that would be kind of a fun one. Then I can revisit it. I love revisiting old videos like that. Ian says, I stopped buying bank because one, they are my biggest holdings. Very good. That's a good choice. And 2, they seem to be at all-time highs every other day, but I will buy more eventually. Yeah, well, I mean, the reasons that they're at all-time highs is that the financial sector in Canada has been doing really well. That is propelling them for sure. So what can I say? Okay. Amrit, Air Canada keeps dropping, wondering what's going on. Aha, I finally cashed in AQN at 8:30. Okay. Yeah, I mean, I'm okay with Air Canada dropping. So, as you know, I started a swing trade, an Air Canada swing trade in the challenge. So I will be adding some shares every single month when Air Canada is dropping. So that's going to average me down quite a bit as we move along. So I'm okay with that. I'm actually okay with that. Every time I've done an Air Canada swing trade challenge in the challenge, they've rebounded, and it's ended up being a short challenge. This time I'm kind of hoping that they don't actually climb up until 2026. That's what I'd like to see. I'd like to see it at least move into 2026. Brian says, I have CLSA, but it's up 27% and the yield is getting lower unless they raise it. I don't have a lot and I want to buy more. Okay, yeah, well, here's the thing about CLSA. When they launched, I believe it was $10 when they launched. So they launched with a 12% yield. Now, 12% is kind of important. That's kind of where they want that yield to be. So I listened to, like in preparing for the video, I listened to an interview from the management team for CLSA. And they even said, in the future, they're probably going to look at readjusting their yield to get back to the 12% if it falls. So in this case, you're probably looking at a dividend hike down the road. I can't tell you when. I don't know what their schedule is for doing this, but that's what they kind of indicated in the video. And the video is like, if you actually go to the CLS page, the video's right there. If any of you guys want to check it out. All right, a Scratch is in the house. Hello, everyone. Hope guys had a great week. I will have to get into my account and see the damage that was done today. I'm pretty much all in commodities. Oh, Scratch. Maybe don't look at it today. Have a good weekend. Look at it Monday. I mean, commodities are down today for sure. Jim says, I watched a few videos on split cores and it sounded like a lot of work to keep an eye on them. So kind of off my list, but that CLSA ETF sounds interesting. Yeah. And that ETF does all the work for you. You don't even have to worry. Split cores, a lot of people don't understand them. They're complex, sure. But something like CLSA, it takes all the work out of it. You got a management team handling all of that. All you really have to worry about is accepting your dividends, and with that one as well, you're going to get it's designed for some capital appreciation too. So you're going to get growth, you're going to get dividends, and that's not too bad. That's not too bad at all. Defense says, usually when I don't know how an ETF will behave, I buy one of each and watch them closely, especially the weekly payers and double weekly payers. Yeah, exactly. There's nothing wrong. Like, you don't have to always go all in, guys. You can do kind of what Defense is doing. Send in an advance force, maybe buy one share or maybe 5, and see how it does. You try it out. Try it. That way there, if it turns out to be a stinker, well, you're not going to have much of a loss, and maybe you saved yourself a whole bunch of money, especially with newer ones. But for the most part, if you're getting it from one of the big companies, like I said, they're managed pretty well, and we're not seeing a lot of stinkers hitting the market. Like, I can't even think of the last stinker that hit the market. I really can't. Okay, Danielle says, I love HHIC because of the diversity of the holdings. Agnico for gold, Cameco for uranium, Shopify, RBC, etc. I think it's well thought out. Yeah, no, I love, like, HHIC has more diversification than HHIS. Absolutely. It's one of the reasons I like it. Let's see. Rory says, Non-covered call ETF for Canada might be XEI. Its dividend yield is a bit higher than ZDV, but is more expensive. Not by much now. Yeah, exactly. XEI, and I like both XEY and ZDV. So, those are definitely some non-covered call options as well. All right. Defense says with US ETF, there is a way to receive money every day, and some are even always green or almost. There's definitely a lot of options, and I have heard, I know that they have a few daily ones as well. But I will say this: if I'm trying to do a video, if I want to do a Canada versus the US video, I'm probably going to try to find similar funds from both sides of the border. So, if we have twice a month pairs, I could potentially pit those out. I could pit those against weekly, but, we'll see. We'll see how it looks. I have to think, I got to do a lot of thought on that one before I even set it up and figure out how I'm going to pull it off. Cowboy, greetings all. Better later than never. Better late than never. Yeah, absolutely. Good to see you, Cowboy. Bleak says, hey all, welcome Bleak. Cowboy and Bleak, I came in at the same time. You guys were off in a chat room just shooting the crap, right? And then you're just like, oh crap, the stream started. Anyway, yeah, I'm trying to create a scenario. It's not working. Rory says, I watched the CEO of Evolve with Gary Gill. Really good. Yes. And like I said, I do like Evolve. I am probably... I don't think this year. I think I'm going to do it in 2026. I'm going to start bringing some of these CEOs on. Right now, I just don't want to. I don't want to at the moment. But I am looking to do that. That will be one of my goals in 2026. And pretty soon, guys, we're actually going to have we're going to have that bonus, our 4-year celebration live stream. It's going to be like maybe 30 to 60 minutes. Just, it's going to be chill. It's going to be chill. It's going to be on a Saturday. I think it's a week from tomorrow. Ian says, is day trading buy then sell or buy, sell, buy? I buy, sell for profit in a week, but don't buy back for over a month. Is that day trading? Let me just, wait a minute. All right. If I buy, sell for profit in a week, but don't buy back for over a month, is that day trading? No, that's more swing trading. Now, keep in mind, swing trading can still be viewed as income, depending on how you're doing it. But yeah, that is, in your case here, if it's over a month, it's long-term swing trading. It's not going to get flagged for anything. But under a month, that's where they'll start looking at you, especially if you're talking about your TFSA. Let's see, that was a great video, Rory. The Gary Gill one. So pretty cool. Brian says, yes, I watched that as well, Rory. A little long, but worth the watch for sure. All right, and let's see here. I'm going to jump over those comments because they weren't to me. The U.S. Weekly are paying different days. Roundhill is involved in a lot of different weekdays. Good old Roundhill. Defense says, if you need help with weekly ETFs, I can help you point some, like Maggie pays Monday, Hal pays Tuesdays, WPay. Oh, WPay. Oh, thank you, Defense. That makes sense. I got a comment. Somebody just put WPay. And that's all they put in the comment. And I was like, WPay, are they talking about a weekly pay? I just replied like they meant weekly pay, but WPay. So, okay, that must be one of these other funds. Is WPay, I don't know if that's one of those other yield max ones. I haven't looked a lot at the US ones, so I have to pay more attention. Brian, exactly. Defense, some days are slim pickings to get a dividend every day. That's hilarious, but why not? Cowboy says November will be buying time. Dividends almost all reinvested. Very cool. Oh boy. All right, guys, we're coming up on an hour. I like to keep these Friday ones fairly short. So if you got your last minute questions, get them on in. We'll answer everything. We'll answer everything we can. Rory says December is my highest distribution. Oh, nice. Yeah, gotta like Gotta like a good month. Well, yeah, I mean, here's the funny thing. If you have a situation like you have, if you've got some quarterly payers in there as well, then yeah, you're going to have months that are really, really big. But a lot of these, well, a lot of cover call ETFs, like a lot of a lot of the income investors, you're not going to have very many quarterly payers, if any. So, but, what can I say? Zyborg says, hey, talking about CRA and trading, do you know anything about that? Do you own 100K of foreign assets question on your tax return? Is there a limit how much US stocks you can hold in a non-registered account? Well, there's no limit, but the CRA just wants to know. So there's no, like, it's not that they're going to tax you. It's just something that they keep track of for sure. So yeah, that's a good question. But yeah, it's just, there's no direct, there's no direct consequences to it per se. All right, let's see. Aurori says, well, every 3 months. 3 months, okay. I guess December is a tree month. Oh, the first Merry Christmas of the season. Well, Merry Christmas to you too, Scratch. There we go. Cowboy, we'll be looking to get a 2,000 a month by year end. And speaking of Christmas, you can't see it, but behind me, there's actually a Lego Christmas tree. I built it last year, and I just sort of keep it there. Like when we get into December, I'll move the Lego Christmas tree over there where the rabbit is. And the rabbit shouldn't actually be there because that's an Easter one. So I should have removed that a long time ago. What can I say? Tom Smith saying, waiting on Air Canada hitting 1750 plausible? I would have said no a month ago, but it's looking close. It's looking like it could happen. But I'll tell you right now, I'm very happy. Like I'm still happy. Anything under 19, and I'm happy right now because I'm pretty sure that I'm gonna do well with my swings on Air Canada. So I'm happy with that. Brian, my banks are all quarterly, 10% of my portfolio. Yeah, there we go. There's a good example. Yeah, if you're holding individual banks, they are all quarterly, and that can make some interesting pay week months. Let's see. QQQ, can you buy the ASX in Canadians' bank brokerage accounts? I don't know. I do not know. I do not know at all. If anybody knows, please let Scratch know. ASX. The AXX. Yeah, I don't even, honestly, I don't even know what the ASX is. I feel like I should. I feel like I should, though. Now I'm probably going to have to look that up a little later. Amrit, no limit, just wants you to report it for stats. If you don't report foreign assets, then can be subject to big penalties. Yeah, there we go. Yeah, that's pretty much what I was thinking. JJ says, also, I'm doing a live with Paul Santori tonight on his channel at 7:30. So that's pretty cool. That's cool. You're going to get, yeah, let's get this done tomorrow, JJ, so you can get it up sooner than later because, if you're getting all of this exposure on these other channels, you want to have some content when people start coming to your channel to check you out. So let's do it. Yeah, for sure. Rory, anyone else buying C&Q below 41? As you know, I do love my C&Q. So, and anytime I'm below, I do tend to pick up a little bit more. So yes, the answer is yes. Cowboy, haven't seen a goblin and now it's Merry Christmas. I know. It's Scratch. Scratch brought that up. Actually today, bought the Halloween candy for the kids. We get a fair amount of kids here. So our little table there by the front door has lots of candy on it. Lots and lots. Ian says, do you know why Canada does Thanksgiving on a different day than the States? It's because of the metric system. Maybe so, maybe so. Well, it's actually funny. The United States actually does have a holiday on the same day as Canadian Thanksgiving. They have Columbus Day. And that's why, that's kind of the stress. Like we're sort of celebrating Columbus per se. But yeah, other than that, I couldn't tell you why it's a different day, but I'm sure if you looked it up on YouTube, you could probably find lots of videos on it. Let's see here. That's my Thanksgiving joke. What was? Oh, do you know why? Oh, because of the metric system. Yeah. Oh, that makes sense. Never mind. I took it seriously. I probably shouldn't have. I should have realized it was a joke. What would you do with 1 million to invest? 1 million. I've already done 3 on 100,000, but 1 million would be 1 million's kind of interesting because you're no longer it's not like you can put it all into your TFSA and just create a giant income fund. You have to sort of start taking into consideration, all of your tools at that point. So that would be a lot more complicated. But yeah, I certainly would invest it. I certainly, if I had 1 million to invest, I'm pretty sure I would have a really nice income flow coming out for sure. Some of it taxable, some of it not. But I would have some fun with that. Rory says, right again. Rory, right again. Defense says, QQQ on TFSA, do you have to report your actions to the CRA? If you have like what, $1 million in foreign assets within your TFSA, yes, it's anything, anywhere you're holding it, you have to declare that you have that. So yeah, your TFSA you would have to declare it in there as well. But keep in mind that because of the contribution limits, odds are you won't have 100,000 in your TFSA of just one U.S. stock. I would hope not. But if you did, then yeah, it doesn't matter where you're holding it. You still have to declare it. And as was mentioned earlier, it's more or less they're keeping track of where money's going and all of that fun stuff, all of the statistic stuff. All right, Amrit says, what's your thoughts on TSLE? Its dividend yield looks high. You think sustainable? Oh boy, that's actually, you know what? We have not had to pull up, we've not had to pull anything up yet today. Let's see, why is this doing that? Who knows? Let's just go and pull up a fresh copy. Here we go. All right, here we go. So what is that? TSLE. Of course. Of course I don't have it. Of course I don't have it. Let's try this one more time. TSLE. Here we go. Yeah, I don't have it here. Let me go to, I'm going to go over to Yahoo. TSLE. I was looking at it, I was thinking, is it's kind of a, even Yahoo's not finding it. So I'm not sure what that is. I look at it and I'm thinking, is it some kind of enhanced Tesla fund? But I don't know what it is. Maybe if you give me the name of it, because for whatever reason, both Yahoo and my Canadian TSM is not telling me what it is. Scratch says, looks like Strathcona's shareholders will get a juicy dividend of $10 a share in November. I would have more share if the price dropped a little more. Yeah, oh boy. I love extra dividends. So, like London Gold's been doing that every quarter so far. Rory says, I wish C&Q would do a special div. They're probably not going to do it while oil is tanked at the moment. Cowboy, we do it after harvest. They do it for Christmas sales. There we go. We'll be upping my C&Q in November. Brian says, I'm rebuying the Halloween candy for Halloween. Not sure what happened to what I bought. Yep, that happens. I can tell you. I know there was one year, back when I was eating chocolate, eating candy and stuff. I think there was one year that me and Jill picked up a couple boxes for Halloween. And as we got closer to Halloween, we had to buy a couple more boxes because those boxes, well, it's like I just want to try one of each. One of each. But guess where that ends up? It ends up in going out and buying new boxes. Well, that's where it ends up. All right. Because we live in a northern country that has colder weather to gather the crops before it freezes. Yeah, absolutely. Yeah, no, harvest window is definitely shorter in Canada. Um, let's see. No, I meant I've seen you have to declare to the CRA what foreign actions you have. I thought the TFSA you didn't have anything to do at fiscal year. No, but you just have to, if you have assets, it doesn't matter where they are, you still have to declare them. If it's more than 100,000 in a foreign country, that doesn't really matter. That's just a simple, it's kind of just a simple question in your tax return. Rory says it's already going down to -4, -5. It actually went to -2 here last night. So I'm like, uh-oh, it might be time to get the duvet out. It's not yet. I'm still got my summer blankets. They're still doing fine. We had frost and wet snow already. Oh boy. None of that yet. None of that yet. Like right now, like today, like quite literally, I don't even know. I don't know, guys. Let's find out. I have no clue what the temperature is here today. Let's just go here and take a look. This is going to be a surprise. It's 12. It's 12. There we go. It's 12. So yeah, I mean, our temperature, right now it's still, oh, look at this. Sunday it's going up to 24. So we've had a very, summer doesn't want to seem to leave completely. But right now, yeah, other than night, now this week, the rest of this week is fine. Like, look at this, 9, 12, 9, 8 as our lows. So not too shabby, not too shabby. I should come back to the big me. Larry says, investing is so easy with 1 million, can hit 5 to 10% a month easy and be very happy. Oh yeah, absolutely. I mean, if you're getting 10% of $1 million in dividends, that's $100,000 in income, right? A year. Right there, bang. If you can't live off $100,000, well, then you probably, your taste might be a bit too high. Sorry, it's TSLY. Okay, all right, Tesla. I know Tesla. Let's go back here. So once again, this of course is what I was thinking. I was thinking it was Tesla. So TSLY. Here we go. Whoops. TSLY. Here we go. So this here is your enhanced Tesla. So this, of course, is one of the, let me close this, the Harvest Tesla Enhanced High Income Shares ETF. So you do get exposure to this when you get HHIS. So this is one of the ones that they are going to hold. But Tesla is very volatile. And that's not a bad thing. And I'll tell you why it's not a bad thing. Because when you look, and hopefully they have it listed here. Yeah, they do. When you look at this big yield, 34.88%. If Tesla was not all over the place, you would never get this yield. So if Tesla was just, kind of on a slow move up and, not making a bunch of waves, the premiums would be very low on it. So as a result, you're getting a high distribution yield. So if Tesla ever does stabilize, this yield will come down. 100% it'll come down. But right now, yeah, you're getting a pretty good deal. You're getting a pretty good deal. And yeah, of course, yeah, people were excited when it launched. And as you can see, there's been a lot of a crash. So I kind of look at it this way. When I look at a fund or an ETF, if it was something that did have, like, I know that this is going to happen, this typical up and then crash. And then, of course, it crashed further after that. So I tend to ignore the first little bit of most ETFs because, I'll look at this and it's like, yeah, you'll say, oh, gosh, look at this. If you bought this at the beginning of the year, your 1 year total return is in the dumper. And it is, absolutely. It's gone from 12 to 9. So it's in the dumper. But if you bought any time after this whole mess, like, look, from here, if you bought it here, you bought it here, you bought it here, you're in the positive. Plus, you've had all of those dividends as well. So, yeah, it depends on when you bought it. Tesla, are they going back up to here? Not anytime soon. But, if they slowly move up and keep on having, like, some of these nice little cuts, that will help keep and sustain that dividend for you. So, yeah, it can be sustainable. but they need to continue that volatility for it to be sustainable at where it's at. So if it gets cut, it's because Tesla became more stable, which is kind of a funny thing to say, is that, becoming stable could be a bad thing for a covered call. So that is always something to keep in mind. Navi says, sold half of my gold holdings this month. Finally, a moment I've been waiting for. Held it over 25 years. I bought it at under 700 Canadian. Oh my God. And guys, look at this. Just look at this. Let's go to gold. So $700 Canadian. And right now, even before this big, but even right now, after this little correction here, you're looking at 4,246 US. That is a serious return on investment. That's like, if you converted that to US? Oh boy, your return on investment is like easily 6-7 times. I mean, it's good. It's good. Is Tesla looking high? All right, let's go back to Tesla. They're higher than they've been for a while, but keep in mind, we haven't had a lot of bad news from Tesla lately, so it's one of these situations. So I will point out, if it stays like this and we don't get any corrections back down, then there is that possibility that we could see a cut in that yield down the road. I'm not saying it'll happen right away, but it could very well happen. They're not gonna, if they're not able to make the premiums because Tesla's no longer being as volatile, they gotta cut it. But right now, for now, this is the type of company that I would probably, if Tesla starts to look like they're doing good, I would be watching the upcoming dividend declarations, because once they've declared it, you're going to get it. But if all of a sudden in the next dividend declaration you start to see it dropping, and if it drops more than you're happy with, well, then you know what to do. But chances are, if that does happen, it probably means that you're not in a very bad space. All right. Cowboy says, we've had a few inches of snow melted off, which is good. Rory says, I want more Ralph bucks. So Ralph, that's Ralph Klein. Ralph Klein, he was a former premier of Alberta. I kind of vaguely remember Ralph bucks, but hey, it's been a long time. Max R says, hope all is well. Trying to wrap up work for the season and catch up soon. All right. If we separate, that'll be a monthly check. Oh boy. All right. And I have no idea how to pronounce your name, but Ahamapowaka. Oh boy. I apologize. I just don't know. But bought some more ZLB today. Woohoo. Fantastic. Yeah. Let's see here. Rory says, Cowboy, he knew how to run the province. Old Ralph Klein. Yeah. I think, Ralph Klein was very popular in his day. Ian says, 1 million. If I got it all at once, I would go eligible dividend stocks, bank stocks, ENB. There we go. Now, guys, if one of you wants to send me $1 million to do this, don't do it as a super, because then YouTube gets too big of a share. Contact me later, and I'll tell you how to get it to me. But I'm kidding, guys. Don't give me $1 million. I won't say no, but don't give it to me. Jim says, we have had frost in the morning for a week. Yikes. I haven't seen any frost yet, but it's been a little chilly. Like I said, it's been a little chilly. Scratch. Natural gas will come back really strong with all the data centers they want to build. Yeah. I mean, anything energy-wise is always pretty cyclical. It's like people panic when energy goes down. And they're like, oh, I can't believe it. I'm losing money. No, what you should be doing is when energy is down, if you're invested in it, that's when you double down. That's when you double down. you average everything down, and then when we get to that cycle where energy is expensive as all banana bread, holy cow, you're doing good. All right, let's see here. Cowboy, I can't figure the green idiots burn up 9 cubic feet of natural gas to get 1 cubic foot of hydrogen. Oh boy. 100. All right, I don't know what 100 is. Good job, Navi. Oh my God. Yeah, absolutely. All right, let's see here. And I'm just jumping over the comments that are not to me. Zyborg says 700 to 4,200 gold over 25 years. That's 6x, about 7.4% annualized. Yeah, now keep in mind, that 700 was Canadian. So you also have to look at the exchange rate from 25 years ago. I don't know what it is at that time, but that would have to be in the calculation. Venture by Nature. How about HHIS? Do you think if they will up the distribution anytime soon? Well, the big thing with HHIS is obviously they have to pay attention to their underlying assets. So all of the underlying Harvest high income shares, if they all remain pumping, then yeah, we might see something. Now, one of the other things is, this really is an interesting thing. Any of the new ones that they've created, so they have a couple new ones that just came out. I think Circle, Robinhood, and a couple others, and they have pretty high dividends. So because of that, because of those high premiums that they're getting on those ones, then yes, I think HHIS will probably edge that dividend up a wee bit. So I'm kind of thinking so. But like I said, at the moment, we don't have anything definitive yet, but I would guess it will happen. Nicholas, oh, I think you're new. I don't recall seeing your name before, but hey, hello. What do you think of Biggie? So as you guys know, I am a huge fan of Evolve. So yeah, I think Biggie and Canny. So between the two of them, I think they're fantastic. I do like them. I like the structure. I think they're putting a larger amount of covered calls than what we're used to on some of these funds. Some people might be concerned about that. I'm not super concerned because I know one of the things that Evolve will do is, under circumstances, when it says maybe we're going to write up to 50% of it, well, that means up to 50%. That doesn't mean they will always have 50% because Evolve managers in the past is if they see some strong bull stuff going on, they will sometimes just roll back those covered calls a little bit, not write as many, so that way they're getting a little bit of that upside potential. So they do tend to do that. So I think it's a good company. I think it'll be a good thing. Keep in mind, Biggie is kind of capitalizing on similar funds like HHIS and some of the other ones that are coming out. I think they're going to do fine. I think it's going to find its place. And of course, getting those twice a month dividends is not a bad thing either. So yeah, I'm a fan for sure. 1 million goes to GameStop. That'd be funny. That would be funny. Could you imagine if you put $1 million on GameStop just before it got pumped? The only problem is, and this is that problem, right? If you put $1 million back when Wall Street Bets was playing around with GameStop, I would be scared to death that, it goes up and maybe you've got 20 million, but then you can't get it out. That's what I would be worried about. Venture by Nature, dividend increase for HHIS anytime soon? Yeah, we just answered that. Venture. I think it will happen. And here you go. You got it. Zyborg, okay, forgot about the exchange rate, my bad. Yeah, you got to remember the exchange rate for sure. It makes a big difference. Ian, dividend increase for HYLD. Heard they changed up the ETF. So yeah, HYLD is another one that I think we're going to see a dividend bump because they brought in the couple of the Daymax. So S-Day and Q-Day. And they're pulling in a lot more money because they are those 0 day to expiry options in those, and they're pulling in a lot more, and that's going to basically be more income for HYLD. So yeah, I expect to see HYLD Probably we'll see HYLD increase their dividend, and I would say them just before HHIS, but I think they both will. But HYLD, I think, is a given. I think that one is absolutely a given. Divi, gotta watch out though. There is two biggie. I wanted to try Evolve Biggie, and I ended up buying Yield Max Biggie. Oh, yeah. Well, yeah, you want to make sure that you're getting Biggie that, getting the US. Make sure it says Evolve. Look at the name. Look at the name. Um, let's see here. CNQE did a deep dive this week. Nice. All right, and Nicholas says, thank you. All right, guys, I'm caught up. All right. Guys, this has been another fantastic stream. We're going to be back here on Sunday. So Sunday, we're going to do this we're going to do a different show. Sunday is this week, but those ones do tend to go a little longer. So I hope we can see most of you guys here on a Sunday. It'll be fun. And of course, if you have not yet caught today's video, deep dive on CLSA, be sure to do that. Grab that, check it out tonight or tomorrow. You know how it works. Anyway, fantastic stream. You guys are a fantastic audience. And hey, now we're using the wireless mic. So let's have some fun. I will see you guys on Sunday. Until then, guys, take care and bye.